Hi guys, Assalamualaikum. So today we are going to present about introduction to a company. So what is company? Companies in Malaysia are those entities incorporated under the Companies Act 2016 or under the previous Companies Act 1965. On the other hand, a corporation has a wider definition to include any entity formed or incorporated or existing in Malaysia or outside Malaysia, foreign company, limited liability relation, or foreign partnership. However, it does not include any public authority not incorporated for commercial purpose, so proprietorship, cooperative societies, and trade unions. So there are three types of classification of companies based on Companies Act 2016. So the first one is company limited by shares, means that its members' obligation to the company is limited to the amount, if any, unpaid on shares held by the members. That means whose shares have been fully paid up, the shareholders are not liable for the company's debts, if there are any. In other words, the personal assets of shareholders, such as their house, car, cannot be taken by the company to settle its debts. Okay, so the second one is company limited by guarantee, means that the member's liability is limited to such amount as the member undertake to contribute in the event of the company being one up. And company limited by guarantee required to apply its profits or another income to promote its object and cannot pay dividends to its members. And the last one is unlimited liability company. Unlimited liability company is one form on the principle of having no limit placed on the liability of its members, and the shareholders will be required to contribute to the assets of the company to enable it to settle its debt.
Present about the types of company in Malaysia. So I will explain about three companies, which are first is a public company. So a public company, they must have the word berhad as a part of and at the end of its company name. So for example, we take as example Asia Berhad. So the second is they must minimum 7 members that are required to form a public company. And then there are no limit on the maximum number of shareholders, and public subscription of share is allowed in public companies, and it can be limited by share or guarantee. And then company limited by guarantee has to be a public company. And then the second is the private company. Private company have the word Sendan Berhad. For example, Pansar company Sendan Berhad, and it must require 2 members. It is the minimum to form a private company. And then the total number does not exceed 50. And then a public subscription of share is not allowed in a public. And then liability is limited by a share. And then they are prohibited from making any invitation to the public to deposit money with the company. Okay, so the third is exempt private company. So exempt private company, companies that are no more than 20 members, and then the share are not held directly or indirectly by any corporation, and then they need not file its annual financial statement with the register of companies, provided that the companies file a certificate signed by the director, secretary, and auditor of company stating that the company is able to meet its liability as when they fall due.
So, the fourth is foreign companies. Foreign companies is a company, corporation, society, association, or other body incorporated outside Malaysia. An unincorporated society, association, or other body that can sue or be sued or hold property under the law of its place of origin and does not have its head office or principal place in Malaysia. So, the best example I can give for foreign companies is Call China. Call China is a company that provides services such as accounting, auditing, taxation, and many other consultation. So the fifth is government-linked companies. Government-linked companies (GLC) are corporate entities in which government owns some or all of the share capital. The GLC could be concentrated in specific industry boost the country economic development. So for government-linked companies, the best example is Tenaga Nasional Berhad TNB. As we know, TNB is our only company that provides us with electricity. So TNB is government-linked companies that concentrate in electricity. The registration requirement based on Companies Commission of Malaysia. I will choose one example to fulfill all the requirements. So A. Name of the purpose company. Starbucks Coffee. B. Type of company. Starbucks Coffee is a public company. C. Nature of business. Nature of business Starbucks Coffee is beverages or coffee shop. D. Address of registered office. As we know, Starbucks Coffee is not from Malaysia, it's from Washington, but Starbucks Coffee also have its head office in Malaysia, which is at Berjaya Times Square, Kuala Lumpur.
So next, I will proceed on other point of registration requirement. Other requirement needed is biodata of each member and director. In order to form a company, Company Commission of Malaysia require they to provide biodata of each member and also the director. The next one, if they want to form a company limited by share, they need to provide the detail of class and number of share taken by every member. And last point is, if they want to form a company limited by guarantee, they need to provide the detail on the amount of guarantee by member and also other registration requirements.
Okay, the next slide is about the financial reporting requirements based on Companies Act 2016 and the Financial Reporting Act 1997. There are three requirements of financial reporting, which is accounting and other records, financial statement, and director report. For the first requirement of financial reporting is accounting and other records. In Section 243 to Section 251 of the Companies Act 2016, the Act requires every company's director to keep accounting and other records which can explain the transaction and financial position of the company. Companies also are required to maintain other important books and register which can be provided for inspection upon request.
The second one is financial statements. The company director is responsible for preparing the financial statements each calendar year. These financial statements should provide a fair view of the financial position of the company at the end of financial year and financial performance of the company for the financial year. So the last one is director's report. Based on Section 252 of the Companies Act 2016, the Act states that the director's report need to be attached to the financial statements of the company. The director's report may contain a fair review of the company's business, description of the risk faced by the company, analysis of company's progress and performance, its employees, community issues, and etc.
Okay, the next one is elements of annual reports. The annual report is the main document of financial and general information of the company. The annual report may include the following: chairman's statements, the corporate governance statement, audit committee report, statement on internal control, social responsibility statement, and financial statements. The first elements of an annual report is chairman's statements. The contents of the chairman's statements are included the general review about the various parts of the business, describing the positive features of the operating performance, development, and potential plan. Areas specified by the statement may include dividend, financial positions, employees, and any others. The second element of annual report is corporate governance statements. The directors are responsible for ensuring good corporate governance, and for these reasons, there must be sufficient transparency, accountability, disclosure in matters relating to the company, and in particular, its duty to improve shareholders' value and the financial performance of the company. A lot of information was given regarding to directors, such as composition of the board, accountability and audit, directors training, and any others. The next one is audit committee report. Committees typically consist the director and senior executive of depending management who provide assistance to the board to allow them to carry out the responsibilities relating to the accounting and corporate reporting. This report sets out the areas of audit committee responsibility and how it performs.
Next element of annual report is statement of internal control. Statement of internal control is a public accountability document that describes the effectiveness of internal control in an organization. This statement is required by the Bursa Malaysia Security Berhad for the listed company to issue this statement in the annual report. The next one is social responsibility statement. Social responsibility statement is for the company's social responsibility information. These basically are the voluntary disclosure as some of company make a statement on their workplace and their commitment to society at large and to the environment. The last one is financial statement. Financial statement is, as we know, is a formal record of the financial activity and position of a business entity. In this statement, it includes the director report, auditor report, and also the financial statement.
Then I will explain about the legal requirement in Bursa Malaysia Securities Berhad. So the first is the listed company have to make an additional disclosure regarding the performance of the company. So the listed companies, for example, Asia, 7-Eleven, they have to make an additional disclosure of their performance of the company. And then the second is they're required to make a preliminary statement of result within 6 months following the end of the financial year. And then third is they required to issue half-yearly report regarding their performance within the 3 months following the end of half year.
Okay, the next one is advantages and disadvantages changes from partnership to company form business. The first advantages is the ability for shareholders is limited. In a partnership, the partners have unlimited products. But in a company, the liability of the shareholders is limited to the amount they have paid for their shares. The second one is it's easy to transfer ownership by selling shares to another party. In a partnership, a partner cannot transfer ownership in a business to another person if other partners don't want a new person in a partnership. But in a company, it's easy to transfer ownership by just selling their shares to another party. Okay, the third one is transactions rates can be more favorable. Company also enjoys tax advantages. For example, their corporate taxes may be lower than the paid by other types of businesses. The fourth one is will access to a wider capital and skill base. It's easy for a company to raise capital by issuing shares to many investors. The more you enter the capital, the more you will earn the money. Okay, the last one is continued existence even after the owners die or leave the company. In a partnership, many circumstances, such as death of the partner, can terminate the business entity, but not in a company, because it is a legal entity and separate from its owner. Even if the owner is die, the business is continue existence.
So for the disadvantages changes from partnership to company from business is the first one is the company can be expensive to establish, maintain and wind up. So for partnership, the partnership gain capital from capital issued by partner, while company they gain capital by issued share and will be buy by the shareholder. Okay. So the second is the reporting requirement can be complex. One of the reporting requirements that need to be prepared for companies is tax reporting. Companies have greater tax reporting requirement than sole trader and partnership, and they can be more complex. So the third is lack of confidentiality. Lack of confidentiality. Okay, as for partnership, their financial affair is used by partner and partnership. But for company, the complete company financial affair are public. It is because they have to disclose their financial affair to attract more people to buy their share. So the fourth is tax. There are several disadvantages relating to tax, such as corporation tax rate will apply and personal tax free threshold are not available to companies. Companies are not eligible for the 50% discount on capital gains made on the disposal of assets held by the company. Shareholders pay tax on the dividend of their marginal rate, and there is no scope for tax planning. So the last is the last is directors' duties. Under the Act, directors have the following duties for act in good faith, exercise power and duty with care and diligence, not improperly use his or her position to gain an advantage, not to trade with one insolvent, and keep book and record. If director breach their duties, they may be held personally liable for the company's debt.
3B differentiated the element disclosure in financial statement between company business and partnership business. And then partnership business, for the number of capital account, it depends on the number of partners in the partnership concern. And for the profit and loss, it distributed to the partner capital account according to the aggregate ratio, for example, 8 to 2. And company business and shareholder funds comprise many categories like share capital, retained earning, other revenue, and capital reserve. And for the taxation, limited company is imposed tax as it is a separate legal entity.
So next is income statement. For partnership business, the income statement show a schedule on how the net profit or loss is distributed to the partner. But for the company business, the income statement provide an overview of revenue, expenses, net income, and earning per share. It usually provide 2 or 3 years of data for the comparison. So for the next point, balance sheet. For the partnership business, the balance sheet shows the balance of the capital amount of each partner classified under each partner equity. And for the company business, the balance sheet provides an overview of a company asset, liability, and shareholder equity. The shareholder equity is a company total asset minus the total liability. So from this, we can see the difference that for the partnership business, it under partner equity, but for the company business, is under shareholder equity. So for the last point is partnership business have the statement of partner equity. This statement illustrates the adjustment in the total partner capital account during an accounting period. It illustrates the increase and decrease in equity of each partner within the account over the financial period. But for the company business, it has the statement of changes in equity that explain the changes in a company share capital, accumulated reserve, and the retained earning over the reporting period.
So overall, in this introductory chapter, basically we learned a lot of things, but the most important is the legal aspect of company formation and the financial reporting responsibility of companies. Okay, and then for appendix, basically we have a group discussion via WhatsApp So in here, basically, we share our resources, and we discuss about a question that a little bit confusing and so on. And for reference, you can refer at here. Okay, so yeah, that's all from us. Thank you.